Well, hi, everyone, and welcome to the Buffett and Beyond Research Stock of the Week. And we're going over Mercadolibre, and it's up 240% over the past 5 years. And we reviewed this stock about 3 months ago, and at that time, it was up 150% over 5 years. Folks, it has had a wonderful, wonderful 3 months. Let's go over it. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now, and that's what we're all about, because we outperform over the past 22 years twice as good as Warren Buffett has, and he has outperformed the S&P 500, and we've outperformed the S&P 500 2.5 times to 1 on a compounded basis. So folks, this is going to be good. Oh, don't forget, if you want a full free month of free subscription for 4 letters during the week, Tuesday, Wednesday, Thursday, and Friday, and 3 videos each week, and a new stock each week, and stocks reviewed in those 4 letters you got, just go to BuffettandBeyond.com. Right down here, you see this address. Buffett is spelled with 2 T's and 2 F's. Let's call it 2 F's and 2 T's first. We just need your name and email. No credit cards or anything. Sign up for that full month free subscription, and you're there, folks. All right, let's go over Mercadolibre. And it hosts online commerce and payments platforms in Latin America. It is the Amazon of Central and South America, and its services are designed to provide its users with mechanisms to buy, sell, pay for, and collect on e-commerce transactions. Has over 40,000 employees, folks. It's a big company. And this is what we wrote 2.5 months ago. Now pay attention to this first paragraph here. Shares of Mercadolibre traded sharply lower after its fourth quarter earnings report. Folks, that was the time. Now, this is what another group said, another analyst said. Our near-term estimates suggest substantial revenue and earnings growth. The company is making major investments to grow its business in Latin America. And our long-term projections, that's these folks that are talking, suggest the current entry point is appealing for buy and hold accounts. Now, we're talking about a company that you can invest in, or they are. And the company is well positioned to be a major player in Latin American commerce for the foreseeable future. And folks, this has been in our portfolio for this entire year so far, and we're going to show you how much we appreciate this company. Now remember, 2.5 months ago, shares traded sharply lower, and they are suggesting buy it. Okay, past 4 months, here we go. Black line is the S&P 500, up about 10%. Here is Mercadolibre. It just had a big fall in here, which is not on the chart. Then it meandered around for a while, and then all of a sudden, just a couple of weeks ago, it came out with earnings, and it shot up 20%. So this stock is up about 47%, while the market is up about 10%. So the past 4 months, it's outperforming the market by 4.5 times. Not bad, right? Okay, let's look at Mercadolibre over the past 3-year averages. And the green lines are Mercado, and we call it MELI because that's the stock symbol for it. And the blue lines represent the average stock in the S&P 500. So when it comes to the clean surplus ROE, and think of your bank account or a bank account when you think of these numbers, because the average stock out there is growing almost 13.5% a year. Mercado is growing 73.6%. So would you rather put money in a bank that's giving you a 13.5% return, or one that's giving you a 73% return? And then with net income represents the earnings after non-recurring items and future liabilities. You know, those options that companies pay high-ranking employees for their service. It's really part of their salary. Well, that doesn't show up in earnings, but it does show up in the net income. Net income is the clean surplus earnings. And so there, look at that difference right there. That's amazing. And over here, revenue, the average stock is bringing in growing revenue about 7.1%. Mercado is bringing in revenue at a 26% rate. So we're looking at almost 4 times the average stock. So this stock has to go up sooner or later. And let us look back here. Now, this is the net income, so these are the clean surplus earnings. And you can see that it was doing pretty good back in 2017, and then it had 3 years of just yuck. We don't even want to look at that. And then it started growing again, and look at these growths. Now, last time we did the stock, we didn't have 2025 earnings, and the 2024 earnings were $32, and now it has been updated to $35.68, and now we have new numbers for 2025 because they expect the net income growth to grow 31% next year. Folks, this is phenomenal. 31% for next year over this number, $35.68. Cents, and that gives us $46.74. Clean surplus return on equity to get into our growth portfolio, we're looking at 20%. Look, and remember, the average stock has about a 13.5% clean surplus return on equity. Look at this stock. It is just going crazy. And back a couple of years ago, it wasn't putting all the money it was making back into itself in order to grow. Then all of a sudden, there was a change in the company attitude and the business deals that it was doing with delivery services, and folks, now it's taking all the money it's making and putting it back into itself in order to grow. That is fantastic. And we just talked about net income growth and revenue growth out of sight. It's just a phenomenal numbers that we are looking at right here. And let us look at this 1 year, and this stock is up over 60%, with the market up about 20%, about 28% over the past 1 year. So this is the past 12 months. This stock is more than doubling the S&P 500. And here's that growth, that big shoot up in over 20% just a few weeks ago. And that's what really propelled this stock up. But look back over here. Look back over here. This also had a phenomenal growth rate in there, leveled off. It corrected itself, and then, boy, all of a sudden, look at this move from a plus 10% return to a plus 62% return. Over 5 years, yeah, here's the biggie. Now, this is the kind of return that you look at in a stock and you say, oh, if I bought it up here, I'm in big trouble. And we were worried. Last time we talked about this, we were worried about this double top in here. But look, if we draw this line all the way over here, we have surpassed that double top in here. So we think with the growth of this stock, I mean, look at this return in here over the past year and a half from back in here. This is 2022, the year the market was down about 20%. The NASDAQ was down 34%. So Mercado dropped earlier started dropping earlier than the U.S. market did here, and it came back down, and then finally when it started to grow, it just took off. Wow, these are phenomenal numbers. So again, we're up almost 240%, while the market is up 90% over the past 5 years. This is a hot stock. We love it. It's in our portfolio. And from what analysts are saying and what we're saying, the numbers that we're looking at, it's going to be in our portfolio for a long time to come. Nice, good, long-term hold. So, folks, we had a tough week this week. The market was up, the market was down, but mostly up. We've had 9 out of 10 months of good returns in this market, so we're fully invested almost all the time. Yes, we use some hedges on some portfolios for those of you who want to use hedges. So go out, have a good weekend, clear your mind, have Sunday dinner with your family, and folks, we'll see you back here on Tuesday. Stay safe, everybody. We'll see you next time.